4 months ago, Bitcoin crashed through support, wiped out thousands of stop losses, and then immediately reversed. This week, it came straight back to the exact same price. The question is why? At the start of 2026, BTC was between $84,000 and $94,000, months of bullish momentum. Then in late January the selling started, steady at first, then faster. By early February, every obvious support level had been broken. 81,000, 75,000, each one taken out as the decline accelerated. On February 7th, volume exploded. This was the highest volume liquidation event of the entire decline, nearly 4 times the 20-day average in a single session. That is not normal selling pressure. That is a mass forced exit. Stop-loss orders sitting below the obvious levels at 65,000 and 63,000 fired automatically. Retail traders were closed out at the worst possible prices. The very next day, something happened that most traders still have not fully understood. Bitcoin fell below $60,000. Then, before that same daily candle closed, it had recovered more than $10,000. One day, one candle, the largest swing of the entire decline and recovery, compressed into a single bar. That low became the most important price level of the next 4 months. Over the following 3 months, BTC rebuilt completely. 67,000, 72,000, 82,000 by May. But that February low was not forgotten. The level where the largest volume of the decline was absorbed remained marked on the chart, not as a prediction of where price would go, as a record of where something significant happened, a crime scene the market had not finished investigating. Here is what I could not ignore. 4 months later, June 5th, 2026, BTC dropped again. Volume spiked again, 3 to 4 times the average, another green triangle, and it drops to 59,100, not 50,000, not 45,000. Within 1% of the exact level swept in February, the market did not choose a random price to stop at. It went back to the crime scene. Why do specific levels matter months after they were traded? When a large volume event occurs, a significant amount of capital changes hands at that price. Institutions filling large orders cannot do it quietly. They need counterparty flow to fill against. Traders who bought at that February low remember exactly where they entered. Traders who were stopped out remember it too. Institutions that accumulated their know precisely where they built their position. Months later, when price returns, all of those interests collide at the same place. That is not a chart pattern. That is a record of where real capital moved. Now let us return to today. That February liquidity zone is still active. It is the highest volume swept level of the past 6 months, and it is currently the closest significant level below current price. When two conditions combine like this, high historical volume at a level and proximity to current price, the zone becomes what the indicator calls the magnet, the point where the most unresolved order flow sits. BTC is at $61,000. The magnet is below at around 59,900. The June retest brought price to within $1,000 of it. Whether that zone absorbs selling again or breaks is what the market is currently deciding. Let us be clear about what we actually know. February 8th, BTC swept below 60,000 with 4 times normal volume and reversed sharply. Fact: June 5th, price returned to within 1% of that same level with the same volume profile. Fact: that level remains the most significant liquidity zone on the current chart. Fact: what we do not know is whether it holds a second time. A break below 58,500 with heavy volume would signal the zone was overwhelmed rather than absorbed. This is not a trade call. It is an evidence summary of why a specific price has mattered twice in 4 months. 4 months ago, Bitcoin found massive liquidity at $60,000. This month, it came back. Whether the market's memory of that level holds a second time is what we are about to find out. That is the kind of question the Liquidity Detective is here to investigate. Not what price will do next, but why it moves to the places it moves to, and what those levels can tell us. If that is useful to you, subscribe. I will be back when the next one is worth examining.